Welcome back. This is the Slash Tax Podcast, where we break down some advanced tax strategy and smart structuring and legal ways to keep more of what you earn. I am your host, Heidi Henderson, and today is going to stretch your thinking a little bit. If you're a real estate investor, an entrepreneur, or someone that's managing multiple LLCs, the conversation might save you some money and could really help you just in managing your entities every year. My guest today is Bobby Casey, who is the founder of Business Anywhere. It's businessanywhere.io, and is a leading advisor to local independent entrepreneurs and global investors. Bobby specializes in company structuring, international tax optimization, residency strategy, and wealth preservation. And he works with investors managing LLCs, entrepreneurs operating globally, and high net worth individuals looking to legally minimize their tax exposure through international structuring. So, very different than what we have talked about in prior episodes. But today we're going to dive in a little bit into Business IO and how you can use that to create your entity structures, quickly set up LLCs, even with multiple parent LLCs and grouping, talking about how investors can avoid mistakes or penalties with how those are managed. And then we kind of dive in a little bit with international tax optimization and what he is seeing directly with some of his clients and some of the countries around the world that are creating a lot of tax benefits for people choosing to live outside of the US. So this conversation, it's very strategic, it's kind of practical, and it's just kind of a fun conversation. So I hope you enjoy. And with that, let's get it started. And with that, Bobby, welcome to the show. I'm really excited to have this conversation with you today.
Thanks for having me, Heidi. Looking forward to being here.
Yeah. So, I always have different conversations with people, and we're oftentimes talking about tax strategy, and pretty much what I focus on is US-based taxes. So income taxes. Most of our clients, most of our listeners are like, oh my gosh, I'm paying so much in tax. What can I do? What are the opportunities? Where are the options? I think it's pretty cool because you are doing something in your business or businesses that kind of hits a lot of those pain points from the sense that most of our taxpayers, as they're looking at eliminating income tax, they are looking at how to build their own companies or how to invest. And that typically means they're having to set up LLCs or multiple LLCs and manage all of the business components that it takes to be an entrepreneur and to generate passive income and generational wealth and all the things that my listeners typically are here for. But I think you also take it another step further because you're dealing with a lot of international stuff. And I haven't really had anybody on this podcast or had many conversations with people that focus in the international structuring and strategies. I've always been fascinated by reading articles about expats and people choosing to retire in other lower cost countries or however the strategies flow. But I thought it was really interesting with how you have built what you've built and where you've landed at this point in your life and your career. So why don't you tell us, starting at the beginning, where was your start? And then how did that ultimately drive you into this place now with kind of international tax consulting or structuring and entity structuring as a whole?
Okay. um, so you made a point earlier to clarify on the optimization strategy for income tax. So
Mm-hmm.
we talked in before we came live here in the recorded session. We talked a little bit about a little philosophical views on this. So I just want to make one quick point on that. When I talk about tax optimization strategy, I am talking about income tax because other things, other types of taxes are generally, I mean, they're pretty much all some type of consumption level taxation. And the only way to change your consumption taxation is to consume less, right? So, and I say that I kind of throw that in general terms because I get this pushback a lot. Like I have a lot of clients in like expats, digital nomad type people who pay zero income tax. And I'm going to clarify, I'm going to call that zero tax, but to clarify, I say they pay a lot. A lot of them pay zero. Like I have American clients making $1 million a year living abroad that pay zero in income tax. And sometimes, from the philosophical perspective, people lose their minds about this. Like, oh my God, I can't believe you don't pay any tax. You
Yep.
know, you're an evil, scoundrel, like paying zero tax. So that's why I clarify income tax versus other tax, because people say, oh, but if you're living someplace, you should be paying tax and paying for the schools and the roads and infrastructure and all those things where you live, which I find hugely entertaining. So this is a little bit of a educational moment. Is everyone should understand how their taxes are utilized when you pay tax. What actually happens to that money? And one thing you should realize, in most countries, your income tax fuels almost zero infrastructure in your local community where you live. It fuels almost nothing when it relates to things like schools and fire stations and police and all those things. If you just look at allocation of tax resources for property tax funds like schools and local services like fire station, stuff like that, property tax in most countries, that's how it works. And if you pay zero income tax, you're still paying property tax unless you live in the woods in a lean-to, right? I mean, you still pay property tax. Even if you're living in an Airbnb and you move every other month, you're still paying property tax, because property tax is built into that nightly rate you pay for the Airbnb or the hotel or wherever you're, whatever indoor environment you're sleeping in, you're paying property tax. And every time you put gas in your car, or you pay a taxi or an Uber, or you buy a plane ticket or a bus ticket or a train ticket, all of those things are have fuel tax built into the price you pay for those things. Fuel tax is what pays for infrastructure, roads, bridges, all those things. So from a philosophical standpoint, whenever I hear people say, yeah, but you need to pay tax to pay for the things you do locally. Well, income tax pays for basically none of that. Like, it really pays for almost none of that. It pays for, bloated government agencies, military, welfare spending, and stuff like that. So if you can, and this is all public information, like, don't believe me, go to the what is it, the cbo.gov website, the congressional budgetary office.gov website, and look at the allocation of resources. You're not going to see any of your local services funded by income tax.
Right.
So anyway,
Well, this
I'll
I mean,
step
I've
off my
talked.
high horse.
Yeah. Well, I mean, it's a relevant point, because I do think that there is a bit of misunderstanding of how tax dollars are used. And also, I think people do forget where we are actually paying tax. And it is everywhere. There is a tax assessed on literally everything we buy and consume,
Yeah,
from groceries to fuel to everything else. And I talk about the other side, the reverse side of incentives, that the tax write-offs and the incentives and the, call them loopholes, that are in the tax code are not there because people are cheating the system. They are there to incentivize and actually coerce people to make decisions where the IRS says, we will actually allow you to go do that and invest directly into certain investments or different
sure,
vehicles, or
right.
buy real estate or invest into your economy in lieu of paying income tax, because it does drive economic growth and GDP and all of the other things
That's
when
a great
we
point.
invest into our economies. So I share that a lot on this podcast too, that when we're talking about cutting tax, this is not about what is the way to cheat the system. It is understanding the reasons the tax code is drafted the way it is. And it is drafted that way specifically to incentivize companies or people, individuals, who are willing to take personal risk and jump in and do something that they are actually building on their own. And the IRS says, you can either send us the money and we'll invest it, or you can invest it yourself. And if you invest it yourself, you're using that instead of paying the IRS.
Yeah,
And
that's a good point. It's like, they call them the sin taxes, right? Like the taxes on cigarettes or alcohol or whatever. what's the whole point of a sin tax on cigarettes? It's to incentivize you to smoke less, right?
Right.
So taxes do work as an incentive in both directions. So you pay the sin tax on cigarettes, they jack up the prices of cigarettes so people smoke less, and it's whatever, makes people healthier, less, lowers health insurance rates, all that stuff. And then the flip side to it is if you invest in a certain category of assets, you get tax breaks for those things. I mean, there's a reason why people say, like, oh, Jeff Bezos, Amazon, they paid like 2% corporate income tax. Like, it's crazy. Why do they pay such a small amount? But that's just like you said, that's the tiniest little fraction of the picture. That's like such a small part of the picture. What
Hmm.
about I, I can't even guess, the 100,000 plus people that are employed by Amazon who are paying payroll tax? Well, if
Yeah.
Amazon didn't have these corporate tax incentives that gave them the ability to go out and hire more people to build these, distribution centers, all of these people wouldn't be employed, therefore not paying payroll tax, right?
Right.
But
And then, yep, employers' portions and all those things.
sure.
Okay.
So
Well, we
anyway,
could we could talk about, yeah. You can tell all listeners that we are very passionate about this because this is sort of our world. But let's circle back
yeah,
about how. Okay, so how did
how'd I
this
get
lead
started?
you to getting started in what you're doing?
Yeah, so I was raised in an entrepreneurial family. My grandpa had a chain of restaurants. My dad had a construction company, and my dad was actually an accountant. Like prior to, he started construction company when I think I was like 2 or 3 years old. So I barely remember that. But before that, he was the controller and CFO of another large construction company. That's like his training is accounting. And so as a kid growing up, I was always raised with an entrepreneurial mindset I was never raised like, get the education, get the job and, get the 401k and all that stuff. That was never my mindset. I was raised like we talked about tax optimization strategies and should we be a C corp or an S corp. Like I knew these things when I was 15 years old. Um, like I was already reading like NK reports and stuff like that, looking at investments. I started my brokerage account when I was 14, like buying stocks. And so I would always had this business mindset. And my dad, of course, always like, oh, we paid so much in tax. It's crazy. We need to do something to optimize. So these were always things we talked about, like tax optimization. And, as I became an adult, never had the job mindset. So I've never had a real job, actually, my whole life. I've never had like a real job. I've had like, these kid jobs, like, working at the go-kart track and unloading trucks and mowing grass and stuff like that. But I've
Hmm.
always had my own business. Like I always did. I started my first company when I was 19. Um,
What was that? What was that?
it was just reselling goods, like buying, like kind of arbitrage thing, buying
Hmm.
and selling goods. It failed miserably. Lost my
No,
money, lost
they
all
say
my
you
money.
fail forward. You fail forward. That's how you learn all the beautiful things.
Yeah, well, to be honest, as an entrepreneur, your entire life is a series of failing. Like that's all you do as an entrepreneur is fail like every day and hopefully you figure out a better way tomorrow to do what you failed on yesterday. That's all entrepreneurship is.
Hmm.
That's why that very reason is why I don't think a lot of people are cut out to be entrepreneurs because um failing over and over and over and over again is emotionally taxing. And if you don't have the stomach for it, like you're probably not cut out for it. But
Hmm.
anyway, so I started another business when I was 20 that crashed. I started another company when I was 21 that did pretty well, and I ended up selling that. I think I was 33 maybe, so I ran it for about 12 years, something like that. And in that 12-year period, I bought some of my competitors. I rolled them up and, made a bigger company. And I also got into real estate at that time. I had a real estate business. I also bought and sold a restaurant during that time. And I became a little bit concerned for my own situation, like from a tax standpoint, from an asset protection standpoint. And in my late 20s, I think maybe 26, 7, something like that, 28, I'm not sure. But somewhere around that point, I've hired somebody like me to
Hmm.
come in and help like go through my structure and my tax optimization and asset protection and all that stuff. And I hired this guy to come in, and I was really fascinated by the process we went through to do it. Basically, all my friends then and now are all entrepreneurs. I don't have any friends with jobs. I don't, I just don't. I don't like everyone I know has their own business because, hey, let's go ride motorcycles Wednesday morning. People with jobs can't do that. All my entrepreneur friends can be like, sure, I'll see you at 9. Um, and I went to some of my friends, or I went back to the guy that helped me. His name was Bob. I went back to Bob and said, hey, if I like go talk to some of my other friends that are all entrepreneurs, can I bring them in and let's help work together on a couple of these clients? Can we work together on this? And he goes, sure, of course. Yeah, I'll take new clients and I'll help you with the consulting process. So that was kind of how I got started doing what I'm doing.
Hmm.
Um, and I kept doing that for a couple of years after that. And then I ended up selling the restaurant. I sold the real estate stuff. It was a installation company I had. I sold that when I was like 33, and just I had kind of a defining moment trying to figure out what I wanted to do. One of my 37 midlife crises I've probably
Yeah.
had in this life, and
Reinventions. We always I feel like
reinventions.
reinventing ourselves or it's a
Yep.
great thing.
I try to do that like monthly now, but um I had one of my midlife crises, let's say, and decided, I wanted to do things different. And one of the things that was really interesting for me was working with entrepreneurs. I like the kind of puzzle solving aspect of solving these problems. It's fascinating. Every day is a different day. Every problem's a different problem. And so once I sold the other stuff, I kind of formalized this into what I'm doing now into like a real business, let's call it. That was, I think, 2009. That's when I that's when I started Global Wealth Protection. And then over the next so many years, my clients are like predominantly they're location independent entrepreneurs that either live outside their home country or have business outside their home country.
Okay.
And so I had to recommend my clients to different like people for different things. Like we need a registered agent to register a company here. We need a corporate service provider for an offshore company here. You need to set up a trust. Let's recommend you to this trust company. You're traveling around the world. Here's a virtual mailbox provider I recommend. So I had like a lot of partners I recommended. And over the years I said, this is stupid. I'm just going to start all the companies that do all these things. Like I'm tired of recommending because I was recommending like to the same people over and over and over and over. And I realized like in the business sense, I had a funnel of clients coming in, but all I was doing was funneling them out to other partners. So I
Hmm.
started all those companies doing those things. So like I still do the consulting. That's what I've been doing like well, unofficially, I think since 2001, officially since 2009, when I
Okay.
kind of formalized it into a real business.
Hmm.
Um, I started a trust company. I have a trust and corporate service company in the Caribbean. So we're a licensed trust company down there. And then I started Business Anywhere, which is now my bigger company where most of my business happens now. And so that's where we work with people on company structure and tax optimization and stuff like that.
Okay. So businessanywhere.io is the
Yep,
website, right?
yep,
And
yep.
if I understand it, this is in essence not only creating different entities, like setting up an LLC, doing all the legal paperwork and structuring, but you're also doing registered agent type things and kind of the annual maintenance on the entities. Is that correct?
Sure. Yeah. So we provide registered agent service in all 50 states plus plus the territories. We do company formation. We also have a virtual mailbox product, which is extremely useful for international people. It's also really useful if you're a privacy advocate. You don't like using your home address and public record, that type of thing. We have a lot of clients that are not international, but they use our virtual mailbox product because of privacy reasons. Um, I mean, I use it too. If you did a background search on me, you would never find the address where I go to sleep at night. It's not possible. I don't, it's no, it's never been, I've never typed that out in a, in a database where it's ever been exposed. Um, yeah, so we do that. We do the, all your company compliance at the state level, like your annual report filings and paying franchise taxes and all that stuff, depending on, the state. We also have a couple of partners there, like software partners for well, yeah, banking partners. So you can, in our dashboard, you can register your company, open a bank account. You can do your bookkeeping, your tax filings, register a trademark, get a virtual phone system, get a merchant account, merchant processing account. I mean, it's kind of like an all-in-one platform for startups. And
Okay.
then we do consulting there. We have a couple of packages. We do have packages specifically for digital nomads, where we package things together, which includes consulting and tax filing and all that stuff together. Um, yeah, so I'm not naming names, but for example, our company is similar to a company that rhymes with Beagle Zoom, let's say. But I'm not naming names.
Yeah,
But
smart, smart.
we're we're
Yeah.
kind of a modern automated version of that. So like one of the big things we do that no one else really does is we fully automate your state compliance. So like filing your annual reports and
Yeah.
paying your
Okay.
state fees and all that stuff. We fully automate that,
Okay.
which is
Very
super
cool.
handy.
Yeah, I mean, I took a look at it because, with a lot of our clients who are real estate investors, many of them have LLCs and many LLCs. An LLC holds every property or every entity, sometimes a parent LLC, and then grouping and doing
Yeah,
complex structures. Does Business Anywhere do that? Can you actually set up a complex structure like that with like a parent LLC and then the
sure.
sub?
Yeah. I mean,
Hmm.
we literally do that every day. Like, so for real estate investors, again, I don't want to sound overly self-promotional here, but you brought it up. For real estate investors, one of the big things our platform does that really no one else does is we fully automate those annual report filings every year. So,
Hmm.
like, we have a lot of real estate investors that move their LLCs over to us because, like, I just had a call with one of our existing clients, like, I think it was like 2 weeks ago,
Hmm.
and he actually signed up for our virtual mailbox service. And we noticed in our platform that he signed up like 20 something, 22 maybe LLCs at, under our virtual mailbox. So he was getting mail for these 22 LLCs under our virtual mailbox service. So we saw that and we said, we sent him a message saying, hey, I see you have 20 some, 20, whatever, 22 LLCs. We're also a registered agent. And, we sent him all the pitch or whatever. And he goes, oh my God, that's amazing. He said, because every year, what he said was every year he misses all the deadlines
Yeah.
because he gets the notices in his email and he's just busy and he forgets or he
Hmm.
misses the notice or maybe it
Hmm.
goes into a spam folder. And he said every year he misses the deadlines to renew his LLC. So he ends up paying late fees or reinstatement fees
Hmm.
every year. So he was like super excited to switch to us because we fully automate it. Like you don't have to touch it. We file your annual report for you. We do the uh, pay the state fee, everything. So
Nice.
so it's funny. We were actually a little bit more expensive than his existing registered agent,
Okay.
but because of him paying all the late fees and the reinstatement fees every year, he was actually paying. He looked it up. He said over the course of a year, he actually pays about 3 times what we charge in registered agent service to renew his companies. Now, to be fair, it's because he just misses emails, but it's, if you get 20 or 30 or 40 LLCs, it's a lot. It's a lot to
Yeah.
keep up with.
Yeah, absolutely. Okay, so you've got this platform. Now let's talk a little bit about how this kind of carries over or links into really like the strategy or consulting with international type businesses or taxpayers. I think it's intriguing. You dropped a carrot early on in our conversation that you've got people making $1 million a year paying zero tax, income tax. We'll correct
Yep,
that.
yep, yep.
So talk a little bit about how you're working with clients and individuals on that, and then let's talk about some examples.
Sure. So, well, your audience is predominantly American, as I understand. So let's talk about like from the American perspective. So if you're an American and you go move abroad, where pick a country, doesn't matter, but you want to go live in another country, you want to retire abroad, or you whatever, you got young kids and you want your kids to have this global experience. I got clients that go with their young kids and go live on sailboats and go. I've had clients go live on a sailboat for 5 years. I'm just traveling around the world. I mean, I've lived abroad many years with my kids when they were younger. So, um, and I kind of bring that up a little bit just because a lot of people, I get pushback on that. People say, "Oh, Bobby, it's your lifestyle is so cool. It's so great. I wish I could do that, but I can't. I got kids in school." And I'm like, "Well, like other countries have schools too. Like
Mhm.
they actually educate their kids too. The U.S. is not the only country with schools, and you can homeschool. There's online schools. There's a variety of options available for kids,
Mhm.
getting their education. I would actually argue the education is going to be much better if you're traveling, because not only is their education going to be a bit more hands-on with you, the parent. Either you're
Mhm.
doing online school, homeschool, or you're dealing with them more directly, or they're going to like private international schools or something. I think the education is going to be better from that perspective, but also the international scope itself. Just having that experience of learning new languages, experiencing different cultures, understanding, you know, like just being in a different place. It's quite the experience. I mean, I've lived in I think 10 different countries at this point in my
Mhm.
life. I've been to about 80 countries, and
Right. No, I mean,
travel changes you for sure.
especially absolutely, like, when children, I think especially when you're young, really at any point in life, but particularly when you're young, I would say that one of the most, impactful experiences of my life was going to Japan multiple times and teaching English in Japan in the summer months during my high school years.
That's amazing.
And
Yeah.
it just completely changes the way you view the world because it takes you outside of this little bubble that you exist in as a child in those places. So I agree. It's so impactful for young people to have those kind of experiences. But yeah, I mean, there's limitations. But again, coming back to kind of
Yep.
how we
I'm
look at
coming
like
back, I promise.
U.S. taxes and ultimately looking at potentially living offshore, what are some
Yep.
of the benefits? I mean, I
So,
know that there are some places you can actually choose to live at least half of the time, at least more than 50%, and there are tremendous tax benefits.
yeah,
Even with going to
yeah.
like Puerto Rico, it changes everything if you have a business in that country versus the US.
Well,
I think that a lot of things people don't realize that there are opportunities for working and living in other places that have significant
sure.
financial.
So, I as an American, you've got to understand, um, Americans, the tax system in the US, it's unique. There's actually only 2 countries in the world like this. So the US is it's what I call a tier 4 country, or a citizenship-based worldwide tax system. So meaning if you're a US citizen, you pay tax on worldwide income no matter where you live in the world. Now, most Americans, if they're travelers, they generally understand that. What they don't understand, which sometimes blows their mind, is there's only 2 countries in the world like that. The Almost all of the rest of the world doesn't do that. If you're a German and you go move to, let's say, Mexico, you disconnect from Germany. You don't have to file or pay tax in Germany anymore. You're clean. You make a clean break. Whereas if you're an American and you go move to Mexico, you still have to file a tax return in the U.S. But there are a series of loopholes available to you. Some of them, like the basic ones, are like the foreign earned income exclusion and then the foreign tax credit.
Hmm.
Like, just at a really basic level, if you are an American and you go live abroad, there's what's called the foreign earned income exclusion. If you look up IRS form 2555, you can see that that's the form you would have to file with your 1040 to show that you exclude that income. But there's a lot of misunderstanding about that. Basically, if you move abroad and you meet the requirements, there's two ways to qualify for that. One is what's called the physical presence test. That's where you have to be physically outside of the US 330 days in a year. That's the easy way to qualify. The downside is you're limited to 35 days physically in the US if you do that. That works if you're going to move and stay abroad, or you're traveling nomad life, whatever, and you don't want to like have a home base route somewhere. That one works just fine. But your limitation is you can only be in the US 35 days a year, which for some people is great, no problem. But if grandma gets sick and you need to go back and spend 2 months with grandma, well, that doesn't work. So the other way to qualify is what's called the bona fide residency test. And that means you need to actually legally immigrate to that other country, like get a visa or a residence permit in that other country that qualifies you and gives you rights of residence in that other country. If you do that, you have a lot more flexibility on the amount of time you can be in the US. Now, if you look up that on form 2555, if you go to the instruction page on that, so 2555 with an I at the end, you'll see the description of that is extremely ambiguous. So there's no clear determination on what it means to be a bona fide resident in that country, other than you need to have legal residence. But there's no clear determination on the amount of time you can spend back in the U.S. All it says is it depends on your intention in that foreign country. So the concept there really is what they call your center of vital interest. So if, let's say you decide you're from, I don't know, Ohio, and you want to go live 9 months out of the year in Argentina, for example. If you can prove your center of vital interest is in Argentina, no problem. You can spend 3 months, 4 months out of the year in the US and without having any tax issues. You would still qualify for the bona fide residency or foreign earned income exclusion under the bona fide residency test. But if you still have a lot of connections back in the US, what example would I give? Ohio. So if you still have like your primary residence is in Ohio, you still got like a car registered in Ohio, you still have health insurance in Ohio, you still go to your primary care doctor in Ohio, you still get your teeth cleaned in Ohio, those types of things, and you get audited because, Heidi, as I'm sure you know, you can do pretty much anything you want with the IRS if you never get audited.
That's
What
right.
matters is when you get audited, right?
That's right.
So, I mean, literally, I guess technically you could file the foreign earned income exclusion forms and still live in Ohio if you want. If you never get audited, great. If you get audited, it's going to be bad. It's going to be bad news for you.
Yeah.
But if you ever get audited and the IRS says, hey, prove your center of vital interest in Argentina, and you just like were living in an Airbnb whenever you were there, and you had zero other connections, but all your connections are still in Ohio, they're gonna buy that claim. So you have to really consider your center of vital interest. But the benefit is if you do that for 2025, I don't know what the numbers are yet for 26. I'm not even sure they've announced it yet, but for 25, you could exclude $130,000 of your income in the US plus a housing allowance. Especially if you're an entrepreneur, a business owner, that's great because even if you have a stay-at-home spouse, you can pay you 130, pay your spouse 130, and then you take the housing allowance. Housing allowance averages around 40 to 50,000. It varies based on which country you're in. I mean, roughly you can make about 300,000 if you're married.
Hmm.
You can make about 300,000 as a family um, without paying any U.S. income tax. So that's a huge benefit.
Yeah.
um, there are other things. There's the foreign tax credit. So
Mm-hmm.
if you move to that other country and you are actually paying tax in that other country, you become a tax resident in that country, then you pay the tax there. And then when you file your tax return in the US, you show the tax you paid, using Argentina as an example, you show the tax you paid in Argentina and you take it as a credit. So you can actually claim foreign earned income exclusion and foreign tax credit simultaneously, if you're paying tax in that other country. But like a great example, mm, like Argentina, sorry, not Argentina, Costa Rica is a good example here. So if you move to Costa Rica, Costa Rica has a completely different tax system, totally
Mm-hmm.
different. So Costa Rica is a residency-based territorial tax system, meaning if you're an American and you move to Costa Rica and you have residency there, you're a legal resident, and now you're taking advantage of foreign earned income exclusion in the U.S. You don't pay tax on that 130. If you're married, 260 plus the housing allowance. Great, you don't pay tax in the U.S. Costa Rica, if all of your income comes from non-Costa Rican sources. So in other words, if your company is registered outside of Costa Rica and you pay yourself your salary or dividend or whatever from your non-Costa Rican company, you don't pay any tax in Costa Rica either.
Hmm. And
So
I'm assuming that that's a non-US, because if it's a US-based entity, then you would be paying tax in the US. But if it's domiciled somewhere else, but then you live in Costa
nope,
Rica?
it can be a U.S. based entity.
Hmm.
It can be a
Interesting.
U.S. based entity. So you qualify for the foreign earned income exclusion. The definition of that is you qualify for that FEIE by spending time in that country. Either like under the bona fide residency test, you become a resident, or you have a visa or a resident permit in that country. But on the US side, your foreign earned income exclusion, you exclude the income because you qualify for it, not because of the source of the income. In other words, your business could be US based, 100% US clients, paid into your Bank of America account, all in USD, and you just pull the money out into Costa Rica to pay, whatever, rent and bear money in Costa Rica, I guess, whatever, whatever you're doing. But you're paying for your life in Costa Rica. It still qualifies for the foreign earned income exclusion. It doesn't have to be non-US source income.
Interesting. Really interesting.
That's a
So Puerto Rica.
big misunderstanding, by the way. I've had countless clients that believed just what you said, that the income had to be non-US source in order to qualify
Mhm.
for it. It's not true. I mean,
Yeah.
you like literally you could have a job. Like you could be a normal W-2 employee if your job is fine with you working remotely and you're fine going to Costa Rica, you could do the exact same thing with a
Mm.
job. Now, of
Is
course, they're going to withhold payroll tax on you,
yeah.
but you're going to get it back. You're going to get all of your, if you made 130 less,
Mhm.
if you made like 130 or less, and let's say well, we'll keep picking on Ohio. Let's say you're from Ohio and they withhold payroll tax on you at the federal and the state level in Ohio. When you file your own tax return, you're going to file that form 2555 showing, let's say your salary was just 100K to make it simple.
Mhm.
You're going to file that foreign earned income exclusion form 2555, and you're going to reflect on there that you made 100,000 as your qualified income while living abroad. When you file that return, you're going to get all your tax payments back because you wouldn't owe any income tax up to 100. Now
Interesting.
you will still pay the social tax. I call it social tax, but I mean like Medicare, Medicaid, Social Security. You'll still
Yeah,
pay
yeah.
that.
Right. Okay. Yeah, it's interesting. I mean, I was just in Costa Rica for the holidays, and I mean, it's amazing. There's so much American influence down there now over the last, I think, 10, 15, probably
Yeah.
20 years. It's been pretty dramatic to see the shift in the movement of US. Maybe that's a reason. What are a couple of other countries that you've seen seem to be sort of at the forefront of discussions and movement? I mean, it seems like Portugal was a big one in the last 5 years. I personally have a number of friends who have purchased properties there and spend time there or spend half the year there. I know that there are some tax benefits with being in Puerto Rico and operating a business out of there. Very, very low tax there as opposed to what could be 37% here, could be 4% if you're
4%,
down
yeah.
there. Yep. What are some other, just share a couple of little tidbits of other areas where there are
Sure.
some really big benefits people are not aware of?
So, yeah, Puerto Rico is a good option. And I tell people Puerto Rico is really only a good option if you actually like being in Puerto Rico, because
Yeah,
in
you have to
order to
physically be
qualify,
there.
you have to live there. Like, you do need to physically spend more than half the year in Puerto Rico to qualify, and they're really strict about that. They don't play around with that. I mean, I'm sure you know Puerto Rico is a territory but not a state, so they got a little bit of a different situation. They have what There's a law down there called Act 60. So if you
Mhm,
register your company down there, and if you meet the requirements to register an Act 60 company down there, then basically you get a 90% federal corporate tax rate deduction. So that's where the 4%, if you're at a 37% corporate tax rate, 90% is 3.7% tax rate at the corporate level. And then as a resident there, you can pay yourself dividends from your Puerto Rican company tax free because you don't pay tax on dividends from Puerto Rican registered companies that operate in Puerto Rico. So there are a lot of like things you got to check to make sure you qualify for it. But if you qualify and you enjoy living in Puerto Rico, that's a really good option for Americans. Um, it doesn't really make any sense for non-Americans because there's much better options than Puerto Rico for
okay.
non-Americans.
What are a couple of other examples?
Um, so Costa Rica, we mentioned, is an excellent option. Mexico is a really common one, but for a little bit different reason. So Mexico technically is what I call a tier 3 country, which is a residency based worldwide taxation. However, Mexico has a little bit different definition of what it means to be a tax resident in that country.
Mhm.
So if you are a non-Mexican citizen, so you're an immigrant into Mexico, so you're an American or Canadian or German or any other nationality, and you have residency, like rights to reside in Mexico, the only way you can be a tax resident in the country is if you earn more than half of your income from Mexican sources.
Oh, interesting.
So I think it's kind of cool and it's a little bit funny. If you read it in the tax law, it's blatantly obvious to me why it's there like that. It's literally a way to attract Canadians and Americans to go buy houses and spend time and spend money in Mexico. It's really obvious the way it's written in the tax law. All they've done is they've made it so that wealthy Canadians and Americans, snowbirds, can go like buy houses or condos or whatever and spend part of the year in Mexico. So what they've said is if you have a home in another country, and by home it doesn't mean like four walls and a roof. It means if you have another country where you have rights to reside in,
Mhm.
which obviously, if you're a non-Mexican citizen, you do have that other country to reside in because as a citizen of the US or Canada or whatever, you have rights to reside in the country of your citizenship. So they say if you have another home you can reside in, then the only way you can be considered a tax resident is if you earn more than half your income from Mexican sources. So obviously, if you have a Mexican company or Mexican investments or all that stuff, yeah, you're going to be a tax resident. But if you are an American and you just move to Mexico and buy a condo or rent a condo or whatever, want to live on the beach or live in Mexico City, but you run your company from outside of Mexico, living in Mexico, that's not Mexican source income.
Hmm. Yeah.
So technically, they tax you, like I said, on worldwide income as a resident, but only if you meet the definition of being a tax resident. And it's very difficult to meet their definition of being a tax resident as an immigrant. And it's literally an incentive to bring people into the country, which I find hilarious. But it's the same like the U.S. The U.S. incentivizes people to do business and invest in the U.S. because the
Sure.
U.S. is by a very large margin the biggest tax haven in the world. Like if you actually add up all the other the money under management in all the other tax haven countries combined, it's a fraction of the foreign money held in the U.S. It's like if let's say you're a German person with a software company living in Mexico, you can run your business through the US and pay 0 US tax easily. Like it's super easy to do.
Interesting.
And that's
Well,
literally an incentive to attract foreign money into the US. So a lot of countries do that. They just, they have different loopholes in the way they do it.
there's
Portugal,
definitely a lot of benefits there to investing in real estate for foreign investors, for
yeah,
actually getting U.S. citizenship. There's a lot of benefits, I think, internationally all over. So, talk a little bit, for the sake of listeners, talk a little bit about how you work with individuals and how you help with kind of structuring. What's the prime client for you aside from Business Anywhere, where people can go and create their entities and have, uh, the annual reports and the support there. I think that's a great tool, actually. I've been playing with it and I really like it, by the way. So kudos on that one.
thank you, thank
But
you.
as far as the international kind of strategy, who is the ideal client? If someone's in a particular situation, where are you jumping in to help?
My ideal client is if you're a location independent entrepreneur living or living outside of your home country, or from a consulting perspective, living outside your home country, or you have business outside your home country. You mentioned Portugal before. Let's say you're an American and you really want to move to Portugal, um, and you've got a company. I don't know. Let's say I don't know, you got a coaching business, for example, and you want to go live in Portugal. That's an ideal client for me because if you think about it, like, first of all, you have multiple jurisdictions in play. We call it the multi-flag strategy, where you're planting multiple flags. And whenever you have multiple flags planted, you end up in a complex situation, full stop. And there's always an element of gray area that you're going to have to become comfortable with when you do that. Like people don't like the idea of getting gray area answers. I mean, nobody likes that. Like, what's the worst thing you ask like your accountant? What do you think about this? And they say, well, it depends,
Yep.
right? I
It's
mean,
it's
every
everything. Yep. So many people think that it's very black and white and that it should be black and white, and they want someone to give them peace of mind and tell them, yes, you can absolutely do that. The reality is that with the complexities of law and tax and government, that there are so many things not defined. We have certain codes,
yeah,
regulations, and definitions, but they do not cover everything, and those are further defined by case law. So somebody gets audited or someone gets sued and they go to court, and it's the courts and that decision that ultimately further defines the law. So because of that, I like to reiterate this. There is a tremendous amount of gray area. And
yeah,
many firms, ourselves included, we walk as tight to the line as we possibly can, but there's always an area of interpretation we have to lean on and trust what
yeah.
we do know, and understand that at any time, case law, there is a judge somewhere who may decide that they disagree.
Yeah, they
Um,
may not like it. There's always a judge, in Nebraska that doesn't like this for whatever reason. Like, yeah, there's always an element of gray area. Like, well, first of all, you got to understand law itself is not objective. The concept of law is not objective. It's literally the subjective interpretation of like rules, regulations, and statutes.
yeah.
I mean, that's literally what law is. And so people say, I need a black and white answer on my situation. Like there's not a black and white answer. And I look at it like this. Um, on the gray scale, one being completely white and clean, black being you're getting paid in a brown paper bag outside of the Circle K, and like you're completely off grid. Um, it, I look at it like this: the moment you move outside of your home country, you're adding different elements to your strategy and your structure because you have different countries' laws, and sometimes those countries can be in conflict with each other. And on a gray scale, if you can be like a 2 to a 4, you're doing pretty good. in that way. So like the example was somebody, the American coaching business wants to move to Portugal. Like a great example of a grayscale thing here is in Portugal, an American moving to Portugal most likely would probably go either a D7 or a D8 visa. D7 is a residence permit, D8 is a digital nomad visa. And there's a tax difference between the two of them, how you're treated. And so you got to be clear which visa is the right one for you. But a D7, if you apply for a D7 in Portugal, your minimum stay to maintain your residence permit is more than half the year, 183 plus days a year to maintain that residence permit. Well, in Portugal, if you are in the country more than half the year, you become a tax resident by default. So you will have a tax filing obligation in Portugal. Whereas a D8 is a digital nomad visa, you don't have a minimum stay requirement to be in the country. But there's pros and cons to both of them. So you got to really analyze which one makes sense for your situation. So you could have a D8 visa, but instead of, you could maybe leave Portugal at the 180-day mark and you don't have to file or pay anything in Portugal. You can live there almost 6 months and be like, all right, I'm out. I'm going to go live in Mexico for 3 months
Somewhere else
or
now. And so
whatever, right?
is that what you are personally doing? Are you personally working with clients and having these discussions
Yes,
and consulting to
every day.
like,
Yeah.
to strategically plan this? And
So
are people contacting you through Business Anywhere IO or through a different vehicle?
some of them contact me through Business Anywhere and they just schedule consultations. Or my other company where I do more of my consulting stuff, they sign up for either our membership program or our coaching. That's through
Okay.
globalwealthprotection.com.
Okay.
But I wanted to hit on the gray area thing real quick with Portugal because it's pretty interesting. They have
Mhm.
what's called, because you mentioned you got a few friends in Portugal. There's a tax regime there called NHR, Non-Habitual Residence Tax Regime.
Mhm.
And the big benefit, the reason why people apply, you have to apply for it. So you get residency there, whatever form of residency you got, and then you can apply for the NHR tax regime. The big benefit is if you qualify, if you get approved for NHR, the benefit is if you get paid in dividends from a company registered in a country that has a tax treaty with Portugal, dividends are tax free under NHR. So that's why a lot of people like Portugal, because they can receive dividends tax free from a company in a jurisdiction that has a tax treaty with Portugal. But the gray area is this: you get a lot of people register US LLCs, like let's say a Wyoming or a Delaware LLC, because the US has a tax treaty with Portugal.
Mhm.
So if you pay yourself a dividend from a Wyoming LLC under NHR in Portugal, you don't pay tax on that dividend. But
Interesting.
here's the gray area. Portugal doesn't have an equivalent company structure to an LLC. They have corporations, but they don't have, like, an LLC is the default tax status of a single member LLC is disregarded entity for tax purposes. So the entity itself doesn't pay tax. It's not a taxable entity like a corporation. The profits flow through to the owner. So in the US, you can't pay dividends from an LLC. So the gray area is in the US, you don't pay dividends from an LLC, but the Portuguese side, you can receive dividends from an LLC and you treat it differently than the way it's actually paid to you in the US. So it that's a great example of a gray area situation where you have a conflict of laws between two countries.
Yeah.
But that is the lightest shade of gray you could do in that situation.
Yep.
You cannot get to a black and white in that situation because LLCs don't pay dividends on the US side. So when you file your tax return in the US, let's say you made 100 grand through your LLC. Well, you're going to file as an American. You would file your 2555 with your 1040 and claim foreign earned income exclusion. That 100 grand is under your 130 cap, so you wouldn't pay any income tax. But you would pay the social tax in this particular scenario. You would pay social tax, the Medicare, Medicaid, Social Security. So you'd pay 15K in in that. But on the Portuguese side, you'd pay zero tax because you're treating that 100K as a dividend.
Okay. Interesting. Yeah, I mean, that's a pretty interesting case scenario. But as it gets complicated, but I mean, the U.S. tax code is so unbelievably complicated.
Yeah.
International is not something I personally have jumped into at all, but have always been a little curious about. I wanted to bring you on because I think it is insightful for people who are entertaining the idea, and I have some friends and family who have interest in living offshore and exploring other areas or other countries and how that's all structured. So I think it's phenomenal what you've been building and the resources that you provide to clients because I've not really found much with anybody else that's really focused in this area and who can provide some guidance and strategy for taxpayers who are curious or wondering what to do if they're dealing with international type issues. So
It
um,
makes sense though, if you think
yeah.
about it, because if you got let's say I'm going to keep picking on Ohio. You got a CPA firm in Columbus, Ohio, and basically all of your clients live in Columbus, Ohio, right? Like
Mhm.
they all live in Columbus. They've got a job or a business in Columbus, maybe a couple of rental properties, a 401k, maybe some investments, whatever, but they're geographically bound to Columbia.
Mhm. Yeah.
And let's say you got 1,000 clients, and then you get one client walks in the door and says, "Hey, I'm originally from Columbus, but I'm moving to Thailand. What should I do?" Well, that CPA has never dealt with this, or let's say one out of 1,000 times they've had a client come in the door, and it is a complex strategy to deal with. Why would they put that much time and energy and effort into learning a completely new thing when you're one out of 1,000 clients that walks in the door to them? It doesn't, from that CPA's perspective, it makes no sense to dig deep into that sort of thing. And I deal with a very narrow niche, but it's honestly, it's because I live this lifestyle. I mean, I've been doing this close to 20 years. Almost everyone I deal with on a regular basis is this is their lifestyle. I speak at conferences on
Mhm.
this, and it's what I enjoy. I enjoy the puzzle solving aspect of it. It's a narrow niche, but it is growing. The digital nomad demographic is rapidly growing.
It
So
seems like it, yeah. I mean, I've seen a lot of that. I think also with a lot of Instagram or like social media influencers, and there's just different lifestyle opportunities, the remote work type structuring. There's just there's so much more opportunity and flexibility now that I just don't think existed even 10 years ago.
it
So it's been
20
pretty,
years ago is when it started.
yeah.
I know the catalyst that started the digital work movement, the remote movement. Skype was invented in 2004, and prior to that, it wasn't feasible for solopreneurs or small business owners to communicate with teams and clients and partners around the world because you'd come home with a $2,000 cell phone bill. Skype got invented and it changed all of that. It dramatically changed. I mean, the whole reason we're sitting here on Riverside, this never would have happened without Skype 20 years ago,
Right.
right? I mean, this is like the grandchild of Skype.
Well, then COVID just catapulted
Yeah,
the movement. It's like
absolutely.
we just gave it a steroid injection because it pushed a lot of people who were hesitant to move into this sort of digital, virtual environment, and was
Sure.
then forced into that, both with remote work as well as just with meetings and other things. So it's been fascinating. I think it's great. We've seen obviously technology is always changing, but we're going to wrap up, Bobby. It's been amazing connecting with you. Are you on social media? Do you have social media pages people can follow you, or primarily website contact?
We have all of it. Yeah, businessanywhere.io is the website. If you look, like, probably our YouTube channel, if you want to go learn more about this, our YouTube channel is probably the best option. We have a Business Anywhere
Okay.
YouTube channel.
Okay. Perfect.
I
We will
mean, but
share
we're
all
on
the
we're
links.
on everything else too. TikTok, Instagram, Facebook. But all those videos are like 20, 30-second clips. What are you going to
Yeah.
learn in a 30-second clip? They're there just for marketing. They go watch a 10-minute video on YouTube. different experience.
Yeah, absolutely. Well, we will share the links in the show notes for sure so that listeners can kind of access some of that data and look you up and stay in touch. But
Great.
thank you very much for the time. It's been interesting and always fun to learn different things and fascinating to hear about some other international opportunities. So it's been a pleasure and I appreciate you being here.
Thanks for having me, Heidi. Cheers.
Well, that was fun. Bobby, that was eye-opening. And talking a bit about structuring for entities using businessanywhere.io, but really digging in a little bit to some of his experience with living and operating businesses outside of the US in different countries. For those listening, whether you're managing a bunch of LLCs, if you need something to help you set those up, structure them, and manage the annual reporting requirements, that platform can be a great option for you. Before we wrap up, I do want to thank our sponsor, Engineered Tax Services. This is the largest specialty tax firm and incentives firm in the country. We just celebrated 25 years in business. ETS has helped investors and CPA firms capture powerful incentives like cost segregation, R&D credits, 179D deductions, and 45L credits. If you want to make sure your properties are optimized from a depreciation standpoint, check out the link in the show notes. And if you found this valuable, please subscribe to the /Tax podcast, leave a review, and share this with someone who might want some structuring assistance or some ideas for a tax strategy. I'm Heidi Henderson. Until next time, keep slashing your tax bill the smart way.